After going sideways, how will Bitcoin move next? If you're interested in knowing more about this, please keep watching. We'll start by examining the daily chart. We previously discussed the corrective phase, in the middle of the current wave. Once this correction is over, the subsequent uptrend is expected to be similar in magnitude to the previous one. The previous price movement was a pattern like this. Though the degree may differ, we can use thicker lines to indicate a different degree. As for the subsequent uptrend, we expect it to follow a pattern similar to the previous movements. As for how to distinguish the levels, this is crucial because it determines the ultimate target price of this uptrend, whether it will rise above 40,000 or remain around 30,000. Let's examine it. We can differentiate the previous uptrend this way. It can be broken down into an initial 5-wave advance, followed by a correction. Then, as for this wave of uptrend, it's doing well. The main thing is the pullback of this wave moving in sideways. Is it considered wave 2 within the 5-wave structure? If it is, there is still significant potential for further gains. In that case, the final target price will be at least above 40,000. However, if the current pullback takes too long, like what we're experiencing now, the current price movement has been almost 32 days. Indeed, the previous pullback was only, I think we should measure it from this point. And it ended here. It was just a 45-day adjustment. If we extend the duration by a little more, say 30+ days, it would be relatively equivalent to the previous 45-day period. If this happens, then it might not meet our initial expectations, and the resulting pattern would be quite similar to the one before, but on a smaller scale. This explains why the longer the consolidation period, the more unfavorable it is for the current uptrend. I believe the wave sequence has not ended yet. However, the duration of this current correction will significantly impact the extent of the eventual uptrend. At present, I'm leaning toward the possibility of the uptrend reaching only slightly above 30,000. Even if it does eventually rise, considering the current length of this correction, it is likely to have the strength to reach only a little over 30,000. If it were to form the kind of wave structure that leads to a rise above 40,000, wave 2 would have completed its retracement long ago, and it would be well into wave 3, or even entering wave 5 after wave 4 is done. But looking at the current situation, this correction has taken a considerable amount of time, which is indeed unfavorable for the bullish scenario, especially when it comes to the final target price. Certainly, this analysis can serve as a reference for those taking long positions or spot trading. Moving on, we can observe that the price has been oscillating on the daily chart for a considerable period. The prolonged oscillation increases the likelihood of a larger retracement in this pullback. But is it worthwhile to consider short positions? Or is it suitable? To determine this, we can examine the performance of the recent downward movement, particularly by looking at the volume. Upon observing the volume, we noticed that during the first decline, there was significant volume. However, the subsequent candles were short, and the volume also diminished considerably. The volume shrunk compared to the previous bullish phase. Okay, let's change it to white to make it look neutral. In this scenario, a smooth and continuous downward trend, presenting a suitable opportunity for short positions using contracts, is typical to have consecutive supply levels, and any rebound should not be strong. If there is a significant and strong rebound, holding short positions can indeed torture the traders. Let's take a look at this segment of the market performance. As you can see, if we observe the volume, focusing solely on the volume of this recent downward movement, we can see that the supply has been quite continuous, and the rebounds in between have been feeble. In such a smooth downward trend, shorting using contracts can be very profitable and easily manageable. In this type of market, even if it's against the overall trend, the daily trend is undoubtedly bullish, so taking a short position would indeed be against the trend. However, even in such a scenario, it might still be worth considering short positions. However, looking at the current market, compared to earlier market conditions, the current supply of selling pressure is not as continuous. At least, it doesn't exhibit The same level of continuity as before. If we intend to short this market, we should wait for a more consecutive supply in the downtrend to make it a worthwhile opportunity. Otherwise, shorting in a bullish context, especially when going against the trend, can be risky. Okay, let's switch to a smaller time frame, since going short seems not a smart move at the moment. What about going long? As for going long, I'm still holding the previous long position. Why? While the market does present some dangers and unfavorable signals for the bulls, I remain optimistic about this uptrend. Even with the challenges, I believe there is still at least one more wave to complete this uptrend with the level corresponding to the previous wave's magnitude. I believe there is one. Considering this context, the price is still within this oscillation zone and hasn't broken below it yet. Especially within this oscillation zone, although the oscillation has been prolonged, the magnitude of the retracement is not significant. It's only around a 236 retracement. A 236 retracement is considered strong. Only strong retracements tend to have smaller magnitudes. If it were a weak retracement, it might reach the 0.5 to 0.618 range. My approach would be to exit only if the price truly breaks below this range. As of now, since it hasn't broken below it yet and is still oscillating, there is still a possibility of a continuation of the uptrend from this zone. Admittedly, there are risks at the moment, but they aren't an issue. Well, risks can be observed from various aspects. There's one induction method worth our attention. Initially, we experienced a uniform oscillation in this area, right? However, as time passed, the oscillation narrowed to only the lower part, specifically around this lower position. Currently, the oscillation zone has become even smaller, resembling the nesting Russian dolls, where each layer is wrapped around another. Now, we are left with just this tiny oscillation zone. As you can observe, the price has been continuously moving toward the downside. This kind of price movement is quite unfavorable for the bulls. Indeed, it is unfavorable. However, personally, I prefer to wait for a real opportunity to take action. If the price truly breaks down and shows no sign of recovery, that's when I'll exit my long positions. Otherwise, I believe the current uptrend still lacks that final upward wave. Now, let's shift our focus to Ethereum. Today, Ethereum's decline has been more intense compared to Bitcoin. In fact, it has even broken through the previous support level. While the downside breakout is not significant, we can observe that the entire oscillation zone for Ethereum is more complex compared to Bitcoin, which has lasted for 32 days. The corresponding range of Ethereum movement is quite complicated. Ethereum's oscillation occurs in the area above, and its movement is not as regular as Bitcoin's, making it less standardized. So the most crucial aspect is to wait and see if Ethereum's support below holds. Currently, it seems effective, as the supply of chips has not been continuous, and the bears haven't shown overwhelming dominance. I reckon that to reverse the bullish trend, the bears need to demonstrate more substantial volume than the previous uptrend. Much higher volume compared to the previous uptrend. Only then would they have a chance to reverse the current bullish trend. Considering the present situation, you can notice that although there is no significant demand from the bulls, the bearish supply is not continuous either. In such a scenario, I would personally choose to respect and follow the original trend, which is a bullish outlook on the daily chart. No problem. It's obvious at a glance when we turn on the EMA. Alright, thank you. You're welcome. To like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. By the way, if you are interested in trading, you are welcome to click the Bybit link below. After completing KYC and depositing $100, you will receive a $1,000 worth of Bitcoin contract position as a gift. This is a real contract position. Once you meet the conditions, you can choose to go long or short, and the position will be opened immediately. There is no waiting time for this offer. Feel free to complete KYC and deposit $100 to claim this risk-free position. Thank you so much. Bye-bye.